All right, good morning and welcome back to the New York session 2 for the day. Kindly excuse me for the non availability on the London Times today for some technical reason. Let's get started off with the Euro USD 4-hour time frame straight away. The consolidation kind of continues as we were expecting, so no surprise there. But it remains to be seen if this consolidation is actually going towards 1170 at least or not, because there could be a very shallow lower degree wave 4 in the making as well before one more high above 1475 that would complete the 5 wave structure and minute wave 3 both before prices reverse towards minute wave 4. This possibility still remains. What I'm watching right now on the price action is if it is what euro is breaking below 1283 or not. If it breaks below 1283, then the structure would be very clear with respect to the subwaves within what we discussed earlier. Now that particular drop, the first drop was 3 waves, and then other rally was also 3 waves. So it's understandable. But now we need to have we should have 5 wave decline. So if it is wave 1, 2, 3, 4, and 5, that's the best thing to happen. That would complete a flat structure 3, 3, and 5. All right, and prices would I think let's take an extension. I think by the time 5 waves would complete, we should be comfortably trading below 1173. That's pretty close to 1.1090, right? And that's absolutely allowed, absolutely no problems at all. We need to see a break below that particular low, specifically 1.1301. A, a drag below that would accelerate lower towards 1170 at least, and that would be minute wave 4 before the minute wave 5 rally could resume. All right, so the weight in, I mean, this is price perspective. We are looking for a break below 1.13 handle, and if it's successful, we should be seeing prices accelerating towards 1180, and that would be a good support for a wave 4 potential. All right, and the rally to resume. It's a 23% Fibonacci retracement as well. So that's the price perspective. And looking at the wave perspective now, if minute wave 3 is complete, that's what we have been talking since last Friday, then we are looking at minute wave 4, and after that a minute wave 5 rally could continue towards 1.17, 1.19 going forward. All right, so structurally we still have one more wave of a larger degree. That's a minute degree. Wave 1 complete, wave 2 complete, minute wave 3 extended. Within that wave 3 minute extension, we've got minute wave 3 extended. Also, we've got sub-minute wave 3 extended. All right, so third wave extensions at 3 different degrees, carving a beautiful minute wave 3 extension. That's the story. And if that's correctly done, we are now producing a minute wave 4 before minute wave 5 rally could resume. And by the time minute wave 5 would complete, ideally prices should be trading around 1.17, possibly 1.19 as well going forward. All right. So that is the story with the wave perspective. And now with trading perspective, mostly we are sitting on the sidelines since last Friday, and we don't mind doing that. We don't mind waiting for price action to drop to uh, a support and then committing ourselves on the long side again. There is one more leg left on the higher side, but if we don't want to commit right now because there is a good possibility for a couple hundred points lower, at least 120, 30 points lower. That is around, let's say around 1200 points or 1200 or 1180. So we've got 140 points gap or difference. All right, and the risk reward ratio would also change. If we are going long at 1180, our stop loss at 0.5, 1.05, it makes a lot of sense, and then we drag it over, drag it to the push through 1.17, 1.19. Makes a lot of sense as well. Maybe it's not one of the best risk reward ratios, but yes, if it drops the 38.2% towards 1.09, and then we put a stop at 1.05, that's a good risk reward ratio because we still have about 800 to 700 to 900 points to cover on the higher side. All right, so keep that in mind, please. So trading point of view, we are sitting on the sidelines, especially the intraday and short-term traders definitely sitting on the sidelines, and for for the for the positional traders, yes, partial longs might still be active. That is fine, but mostly profits must have been booked, and that was what was suggested even over the last week, and even now, if it is not done, it's good to be taking profits even now. All right, so that's the story in the trading point of view, the trading perspective. So all three perspectives discussed. Let's now move on to the dollar index, please. All right, so the sideways activity continues. You know what, looking at the dollar index chart, personally, it feels like this is a lower degree wave 4 triangle in the making before one more thrust wave on the lower side, and that would terminate minute wave 3. We still don't have a minute wave 3 in place. It really gives me a very strong feeling of sub-minute degree wave 4 in the making, and one more push lower before that wave 4 minute rallies. All right, so price perspective, we might see one more decline towards 98.25 as we were discussing earlier. All right, but that's not an encouragement to sell right now. All right, please do not do that. We will not be able to manage the risk reward ratio, an ideal risk reward ratio. But just for the sake of the price action, what could be in the store, please please be prepared for one more low towards 98.25 before that much awaited rally or relief rally continues. All right, that's the price perspective. Now the corrective wave is expected to reach 10150 at least. Now please remember this is the US dollar index 8 cap provider. So If you are also following 8 cap provider in your trading, it's fine. Price action will be the same, 101.54. But if your provider is different, like say a capital.com or any other provider, then please use the Fibonacci ratios on that particular boundary, but there would be price discrepancies specifically in the dollar index. All right, you won't find prices rallying all the way towards 101.50 if your provider is different. All right, so kindly adjust according to the providers. The corrective wave is expected to hit the price around 101.50 and then turn lower again towards 96, possibly 94, and further lower as well. All right, that's the price perspective. Wave perspective is, it's still a wonderful story. We potentially have completed minute wave 3. Remember, there could be one more shallow low before minute wave 3 completes. But minute wave 3 is a certain extension, and one of the classic example of how how an extended wave would look like. We've got the sub-minute wave 3 extension, and we've got the minute wave 3 extension. Ultimately, we've got minute wave 3 extended as well. So we've got minute wave 1, minute wave 2, minute wave 3, possibly potentially complete, and that would lead to a minute wave 4 rally towards 101.54 before prices turn lower again. Overall, it looks like we are heading lower towards 97, 95 levels going forward. That is also the Elliott channel support line coming. So it would be very interesting to see how the bounce is coming up there. A complete cycle comprising of 1500 points would finish, and we would be we would have witnessed the complete cycle of 1500 points, which started right on January 13, 2025. So, I mean, if this cycle completes in May 2025 or sometime in May 2025, it would almost be a 6-month cycle that we would have been traded, and it would be one of its kind where a complete 1500 point cycle has been captured. Maybe not completely, but at least 60 to 70% of it. All right, and then it would be very interesting to see how price action behave, because the structure might be telling us a story that this 5 wave is uh, wave C of the larger degree ABC correction. All right, so it makes a lot of sense for a rally to resume from here and extend much higher. All right, so let's continue uh, with the trading perspective. Trading perspective, we are sitting on the sidelines right now, and we would allow price action to produce a corrective rally towards 101.50 before we initiate shorts again, and the stop loss in that case would again go towards 107. Remember the impulse structure. Minute wave 4 would never enter the territory of minute wave 1 to keep that impulse structure intact, and then turn lower towards 96, 95 levels going forward. All right, we are just 1 minute away. Let's quickly point out GBP USD as well. Now that particular structure makes me rethink or readjust the wave count of minute wave 5 over here, and then minute wave 3, and then that, and the next would be minute wave 4 lower. Pound is lagging behind for this rally. This rally almost completed in the euro and the decline in the dollar index over the last week. Do we have a divergence? Yes, we do have a divergence. So that could be wave 1, wave 2, wave 3, minute degree, and 4 and 5. So now we have got, maybe we've got minute wave 3 termination, and we might have to readjust the extensions as well. Let's do that. All in all, what the conclusion that we can easily draw looking at the chart right now is that we still need to wait for a minute wave for corrective decline, at least toward the 38.2% mark. You never know, it's a running flat, or it can drop towards 27.56 as well. But I'm taking a hypothetical 28.74, and the next target could be around the 1.35 at least, but not from here, ideally after a corrective decline. All right, let's have a look at the daily chart, how price action is shaping up. Do we have a divergence there? If we do have a divergence, then it would be very interesting. Yeah, we have, but prices have moved very swiftly. I mean, this is tied up with, as I said, it's tied up with gold as well. So the more stronger gold performs, it affects pound and Aussie dollar as well. Let's have a quick look. Look at the Aussie dollar here. Now this is what we were referring to. The Aussie dollar has rallied already to the first resistance, and that could be the beginning of a trend reversal. All right, so it's good that pound and Aussie. It was expected. I just wanted to make sure that what we were expecting is on the chart. So, wave structure point of view, GBP USD is completing potential minute wave 3, and let's wait for a corrective decline minute wave 4 before we re-enter. Okay, it's good to take all your profits if you have still not taken, but I think most of them must have taken because we have been vouching to take profits since last Friday. I think we now have uh, wave 1 expanded flat, wave 2, wave 3, 4, and 5 already. Or maybe one more flat, wave 2, wave 3, 4, and 5. Disturbance streaming, but I think it's back. Back. So the price action in gold. Let's go on an hourly chart. I think we still have, because that was an ABC, or it's an ABCDE possible triangle in the making. So we still have one more high, brothers. One more high, possibly one more high, brothers and sisters, sorry, before gold could terminate. Watch out for 32, 60, 70 levels. And we would be very keen waiting for that price to hit. And I would be personally going aggressively, issuing an aggressive short trade into the portal then. Right now, it's not okay to do anything at all because we are just one wave away. It could be a very shallow wave 4 triangle in the making, and the risk reward ratio would not suffice at all. So, it's better to refrain from going long, and in fact should be waiting for 3260, 3270 mark to complete before we issue an aggressive short call. All right. But I think it could be possible that we we might be in the last wave of the minute wave 5 and subsequently minor wave 5 towards 32, 60, 70 mark, or we might be wave 1 of 3 within the minute wave 5 extension. So we've got wave 1 minute, wave 2 minute, and then 1 of 3 minute degree within the 5 wave minute extension. That is an alternate count, though we are not relying absolutely on that particular count. All right, so flat in gold for now, and we'll wait for 32, 60, 70 to hit. And 1 Bitcoin right now. Bitcoin. Let me see if we are close to 80. No, sir. I think we still need to wait. It could be forming an expanded flat. There is a 3 down and possible 3 up with a diverging scenario. Let's check out. Yeah, that is a potential. It's not an exact divergence, but nothing to be done right now. If we want to go aggressive long, and there's nothing wrong in doing it because we've got the first motive structure in place. That would be somewhere around the 80 or possibly 78,000 levels. That would be a good buy entry for Bitcoin. All right. So please remain aside for a moment, for a while, and then we will issue a trade call in the portal. And the US 30, the Dow Jones, okay, the Dow Jones seem to still unfolding. It possibly looks like it is still unfolding wave 4 at a minute degree. But if prices manage to rally through the 41,000 mark or 42,000 mark, it would no more remain a leading diagonal or a first impulsive structure. We would have to readjust the counts here. It would be wave 1 and then wave 2 of minute wave 3 unfolding. All right. So that would be wave 1, 2, 3, 4, and 5. It would give us wave 1 of a minute degree, and then wave 2 of minute degree is unfolding. But whatever the case, I think Bitcoin, sorry, not Bitcoin, but Dow Jones is good to remain sell on rallies. We are already short in the portal, and we would like to add further if prices manage to touch 41,000, 42,000 mark. All right. So those are the stories as we move into the New York session for the day, and we will be back in a few hours now to touch base in the continued story in the Sydney Tokyo overlap. Until that time, once again, thank you for tuning in, and please do take care and God bless. Goodbye.